Hello and welcome to Street Smart. If you want to learn about how to be smart with your money and learn about stock market investing, you are at the right place. This is a small course which will give you information about stock market basic. With that, let's get started. Welcome to the introduction to the stock market short course, and this is the fourth video of the series. In this video, we will go over type of financial statements, balance sheet, income statement, cash flow income statement, and stock price valuation. So, what is financial statement? The written record that conveys the business activities and financial performance of the entity. Federal securities law require publicly reporting companies to disclose the information on the ongoing basis. That is the like company which are listed on NYSE or Nasdaq are required to publish the 10K, which is the annual report, and 10Q it is a quarterly report which shows which gives information about the current status of the company, as well as like what are the what company financially invested and how it is performing. That all information is available in this two report. And 8K is a current report that company must file with the SEC to announce the major event that stakeholders should know about. This would be related to any investment that company did in a financial year. More information can be found out on these two website. Can refer to them. They both are government website. You can refer them for more information. In final statement, we would be looking mostly at these three statement, that is balance sheet, income statement, and cash flow information. So now we will look at Microsoft annual report. So for that, we just need to type Microsoft financial statement. You can visit the first page. You can find information for every financial statement for every company. It would be in the investor page, in investor relation page. So you can just see here it's 2023 annual report plan. So we can just see here it would have all the information from kind of what is the current investment that company did, risks involved, and different sector of the business. But from here, we would, for quantitative analysis, we would be majorly looking for financial statements. Can just scroll down and find them. So it would be in this section, that is quantitative and qualitative disclosure about the market risk. So here we see the first thing that is available is income statement. So what information is available in the income statement? The information about revenue, expense, gain, losses, provide valuable insight into company's operation, management efficiency, sector performance, and performance in the comparison to competitors. So here, as we see, top section of this statement as a product, like from product business, selling the product, Microsoft generated here about $64 billion, and you can see here that all the numbers are in millions except per share amount. So yeah, and from service they generated about $150 billion, and there is a cost associated in order to bring that or generate that revenue, which you can see here in this section. And yeah, gross margin are the money with left, kind of excluding the cost of revenue, is called gross margin. And there are a few additional costs like research and development, sales and marketing, general administration, and also taxes which company pays. And then we come up with the net income, which is basically the profit, which is the kind of final amount that company saved in a financial year. As you can see here, it is 72 million compared to 2022. It's almost same, but yeah, from 2021 it's far better. So this is earning per share, which is like about, we would always see this one because company in any given financial year might increase or decrease the number of outstanding shares. So we can see the diluted EPS is here about 9.6, which came from the net income divided by number of shares. As you can see, there are like near about 7.5 billion share outstanding diluted. So yeah, we can just divide and get this number, which is very important, which is called earning per share. Moving next to other statement, which is balance sheet. As we scroll down, we see here the balance sheet. It gives information about asset. What is asset? Resource owned by company that has a positive economic value, like cash and cash equivalent, short-term investment, capital asset, non-physical asset, etc., inventory, and all that. So by liquidating this, it would gain this amount, which is about 400 billion. And liability is a debt or financial obligation which company owes. It would be dividend, short-term, long-term debts, mortgage or long other loans, wages, operation bill, etc. So here we can see that total liability is this one, and we are looking for this stakeholder equity. It should be always positive. It is receivable. Like formula to get this one is asset minus total liabilities, which gives about $206 billion. And we can see compared to 2022, the value has increased. And then the important financial statement is cash flow statement. It gives information about inflows and outflow of cash in the company for that given year. So as we can see, there are three sections. One is operation, financing, and investing. So operation flow generated from good manufacturing and sale. This is all here. Cash flow from investing is a cash generated or spent from investing related such as asset and securities. And financing is the net flow of cash that are used to fund the companies and its capital. And the most important metric we are looking here is net cash from operation, which is about 97 billion, and total capital expenditure, it is 28 billion. So we get near about 60 billion free cash flow. We can, that is the, like Microsoft generated 60 billion cash flow that year. And if we see compared to 2022, the cash flow is decreased. So free cash flow is the money left after company pays its capital expenditure. So as we can see here, it has decreased because in 2002 it was near about 66, 68. Yeah, so that's all. We look in financial statements. Yeah, again, moving back to the slides, like how to value the stock, right? That how to find the true value of the stock price for a business. There are a few different models that we can use, or kind of quantitative model we can say, which is discount cash flow valuation, which is the valuation method that estimates the value of an investment using its expected future free cash flow. So yeah, and then other model is dividend discount model. So if valuing company based on the theory that its present price is worth the sum of all its future dividend payments when discounted back to all present value. Like if dividend paying stock like Coca-Cola or Johnson and Johnson, we want to see based on like they are constant dividend provider from past like many decades. So based on that, if we want to analyze the stock or finding the intrinsic value, we can use a dividend discount valuation model. And then there is a Graham valuation. uh, there is a famous book that is Intelligent Investor, in which Benjamin Graham gave a formula which is purely based on EPS, P ratio, and EPS growth rate. It is irrespective of the stock price. He came up with one formula, and using that formula, if you find the intrinsic value, that is called Graham valuation. And yeah, after that, we need to also understand the safety of margin of safety, the discounting the intrinsic value or the price of the stock to take in consideration of any error. Suppose we kind of came up with for company X intrinsic value of 100, then there is a possibility, there might be a possibility of error. Then we multiply by 0.7, that is we only consider like 30% as an error. So intrinsic value is 70. So if the stock price hit below that price, then we invest. Otherwise, we wait till that point. And yeah, good investment should be no brainer. If you like this video, please like, share, subscribe to Street Smart, and see you in next video. Thank you. Bye.